I'm Tom Selzer from Livewire, and joining me today is Tim Campbell, CEO of Baillie Gifford, to share where they're looking for growth right now. Tim, thanks for joining us.
Nice to be here.
Tim, I think you've been making the case for global optimism. What do you mean by that, and how is that shaping Baillie Gifford's investing philosophy?
Look, we've been around for 118 years. We've studied what actually drives markets. And what actually drives markets, it's not a perfectly distributed bell curve of companies. It's a very, very small handful of companies that do fantastically well. So actually your biggest risk, if you're really trying to generate fantastic returns for your clients, is not having that very small handful of companies that do ferociously well. And so in order to make sure that you've got those in your portfolio, you need to have a degree of optimism and creative thought as to what they might be able to achieve. So, again, to give you some examples of the types of companies that we have really seen drive returns, it's been companies like Tesla or Amazon or Nvidia. And actually, when you look back at our research, when we first bought Amazon, I think in 2003, Tesla in 2013, Nvidia in 2016, if you look back at our research, the thing we got most wrong was we underestimated how fabulous they could be. It was a lack of optimism on our part, so we're trying to correct for that.
Maybe building off the back of that, I think you said potentially one of the biggest risks to investors is a lack of imagination. Do you mind expanding a bit more on that as well?
I think that's incredibly important, actually, and it's difficult because as an industry that we got that horrible phrase of cautious optimism. Everyone's cautiously optimistic. Well, try being wildly optimistic. That's how you're going to give yourself the best possible chance of having these fantastic companies. And here again, you think about when we first bought Nvidia, we were really excited about their gaming chips. But with the best in the world, did we actually see that they would become a $4.5–5 trillion company that we're seeing today? No. But again, I think we're really lucky that we have access to some of the management teams of these companies, whether that be private companies or public companies, and they give us a window into what is actually possible. And I think it's incredibly important that we bring that level of optimism to what they're telling us, and then decide for ourselves what the probability of those scenarios playing out might be.
Just drilling down into one of the examples you used there, Tesla, what was the thesis behind that?
We started looking at Tesla 2012. I think in 2012 they'd managed to deliver slightly under 3,000 cars. When we first bought it was in 2013. I think in that year they maybe did about 20,000 cars. And then for the next 4 or 5 years, maybe 6, the market was obsessed about when is this company going to go bust. It was one of the most shorted companies on the planet. But really the thesis for us was more actually about battery technology. We could see that if the rate of improvement that we were seeing in battery technology continued on the curve that it was on, and if anything it was likely to accelerate, then there was a genuine chance that they were going to be able to totally revolutionize the auto industry. And of course that turned out to be what they've done. I think last year they sold about 1.7 million cars. So again, it was just drilling into one particular aspect of what they were trying to do was really what got us excited about it. And again, having that level of optimism about, okay, look, there are risks here, it may or may not survive, but if it does work, if they hit that escape velocity, this could be an incredibly valuable company.
And with markets these days dominated by more short-term narratives, things like geopolitics, rates, earnings, what practical steps do your team take to stay focused more on the longer-term outcomes?
I suppose my background in the firm is emerging markets. So dealing with macroeconomics, geopolitics, interest rate volatility, that's nothing new to us. I'm often quite surprised, the obsession about what the Fed rate is going to be. This is not ultimately what drives markets. What drives markets is the transformational businesses that are innovating and creating new strategies and new products. So if you focus on that, then you're going to do far better than obsessing about what the Fed rate's going to be in the next quarter or the next year.
I think you've also made the case for private growth equity. Do you mind expanding on that and maybe what the key benefit for investors is here?
Look, I think we see our role as providing clients with access to the world's greatest growth companies. And what we're trying to do is trying to capture the steepest part of that growth curve. Now, whether we like it or not, more and more of that acceleration in growth is happening in private markets rather than public markets. So if we continue to give our clients the sort of things that we're wanting to give them access to, we have to be present in private markets. I mean, it's a very obvious point to make, but when you've got, companies like SpaceX or Anthropic that are seeing just such explosive growth, and these are hundreds of billions of market cap, you have to have a presence in private markets.
Maybe just expanding on the Anthropic example you just used there, how did that opportunity come about, and what's the thesis?
Yeah, look, we're very lucky insofar as we have extraordinary access to the management teams of these companies, and I think that's really comes from the reputation that we've built up actually investing in public markets as being very long-term, supportive shareholders who are happy to take risk with companies in the hope that they become these transformational growth companies that we've talked about. And really because of that reputation, that has allowed us access to companies like Anthropic. We're very lucky that we can sit down with Dario Amodei and actually speak out what does the landscape for AI look like. So we spent a lot of time speaking to the big LLMs. We got to know Dario Amodei. We really bought into what he was trying to achieve. And I think what we've seen particularly recently, it's extraordinary what that company is managing to achieve. I mean, this is a company that made zero revenues in 2023, and its run rate now is $14 billion, and that's the acceleration we're seeing from here is quite incredible.
And I think Baillie Gifford also employs something called the 30-minute rule. Do you mind unpacking that a bit for us and what that looks like in practice?
Yeah, so this was something particularly actually instituted in the strategy, which is I guess we're most known for here in Australia, our long-term global growth strategy, and it was really just recognizing that again. It's very easy to go into discussing a company and to come up with a myriad of things that might go wrong. I think it's incredibly important that you give yourself the opportunity to think about what might go really, really right. And to be clear, it's quite difficult for a Scottish firm. We're sort of genetically miserable. So it's just having that sort of open-mindedness, that creativity of, okay, well, let's think about something like Anthropic. What if they did go into every single commercial vertical? That we already see they're going into finance, they're going into healthcare, they're going into cybersecurity. Well, as Dario Amodei said himself, that revenue opportunity has gone from being billions of dollars to trillions of dollars. Well, let's think about what that might actually look like. And just by thinking in that sort of open-minded, optimistic way, I think differentiates yourself from most market participants.
And finally, where else are you seeing opportunity in global markets right now?
Well, look, I think there are lots of opportunities. I think you also need to be very aware of the huge pools of capital, what is going on in the world are going to get destroyed. So I think you have to have your eye on both sides of this. But in terms of opportunities, there's obviously what we're seeing in AI is totally transformational. You have to think about the second derivative effects of that. You have to look at where the bottlenecks. One of the big bottlenecks at the moment is really the energy supply for that. So we're excited about not just things like copper, but also do we actually get to a stage where we're talking about solar farms in space? What does that look like? Is that how the energy is provided now? Whatever you think of Elon Musk, he makes a pretty compelling case for the incremental energy supply that we're going to need to run all the compute that we're going to need. It's going to be a no-brainer that most of that is going to be solar farms in space in 3 years' time. And then okay, well, let's think about that. And what does that actually mean in terms of the products that you're going to need and which company is going to benefit from that? How far can we push companies like ASML and TSMC in terms of, again, that there's a reason that Nvidia and Meta and so forth are signing up 3-year contracts with these massive companies. So thinking about where are the bottlenecks and can we invest in the companies that take advantage of those.
Tim, thanks for joining us.
Been a pleasure.
Thanks for watching. Make sure to check out our YouTube channel for more great videos.